Meanwhile, the central bank has reduced the standing deposit facility rate and the standing lending facility rate by 1 percentage point each to 4.50% and 5.50%. During the monetary policy review press briefing today, the governor of the central bank urged financial institutions to reduce their lending rates in line with central bank directives.
Interest rates are on a declining trend. We urge financial institutions to expedite reducing their lending rates, with ideally no new lending taking place at double-digit interest rates. In the meantime, we continue to decisively deal with legacy issues in relation to certain financial companies in order to protect depositors. We expect the Sri Lankan economy to strongly rebound in the second half of the year. It was unfortunate to see the Sri Lankan economy being reclassified as a lower middle-income economy, although this has a mere symbolic value. We are confident that within a short period of time, this setback will be reversed and the symbolic upper middle-income level regained.
The governor also spoke about the incident where relief was announced last month after the president reprimanded the central bank officials. What exactly happened in the situation that was portrayed as a crisis was that the Monetary Board had convened meetings across 2 days to make the relevant decisions. However, the paper said this was done urgently after the president had told us to do so. We made this decision after 3 rounds of discussions. Unfortunately, that incident took place.
සාකච්ඡා වාර 3ක් පමණ ගිහිල්ලා තමයි මේක තීරණයට අපි අවිල්ලා ඉන්නේ. අනගාටුදායක විදියට මේ සිද්ධිය සිද්ධ වුණේ.
අපි අහන්න කැමති ඔබතුමාලගෙන් විමසුවේ නැද්ද ඊට පෙර ජනාධිපතිතුමා කියන්න කලින් ජනාධිපතිතුමා ඇහුවේ නැද්ද මේ ප්‍රමාදයක් තියෙනවා නම් කොතනද ප්‍රමාදය තියෙන්නේ?
අත වශයෙන් එහෙම
No, that wasn't inquired. If it had been inquired, that incident could have taken place in a different manner to what happened. After that, considering such problems that arose, I introduced a system in which I briefed the President and the Prime Minister before such discussions. Deputy Governor Karunaratne explained as to why certain individuals were compelled to pay a higher loan installment following the debt moratorium that was granted in light with COVID-19 concessions.
Under the debt moratorium, we have given up to 6 months concession for the customers. So during that moratorium period, especially during this 6-month moratorium, customers are not required to pay either principal or the interest. But subsequently, they need to pay certain percentage for the bank because bank has already borrowed that money from the customers, and even during that period, that moratorium period, banks are required to pay interest for the customer. Eventually, what happens is, due to this 6-month period, the total loan tenor, the total loan period, get extended by 6 months. For that period, banks are not getting any interest. So therefore, central bank has allowed bank to charge up to 7% interest for that moratorium period.
Even the 7% interest is a maximum. Now, what we are going to see, market rates are coming down further. As a result, the customer can even go and negotiate even for that period current market rates, which are going to be lower than at the time of that we issued the circular, that was the 7%.
The central bank said non-performing loans have risen to 5.6% from 5.1% during the first 3 months of 2020. The central bank had purchased treasury bills worth 232 billion rupees during this year. However, despite high levels of surplus liquidity available to banks, credit extended to the private sector contracted significantly in May of 2020 to 6.4%. while net credit to the government and public sector increased to 32.1% and 31.1%. Senior Governor Veera Singha also expressed concerns regarding money printing.
The concern, if anyone wants to raise, is basically whether that would lead to high inflation and overheating situation. I don't think, because right now what we see, inflation is very well anchored at the below of our target range, and there's no evidence of any overheating of the economy. But if we're going to see any adverse impacts going forward, certainly we have a lot of instruments to absorb that liquidity anytime.